keep hearing people say lately that we're becoming a renter's nation, or this is where we're trending long term. What's your thoughts about that?
It is 100%. 25% of my market is owned by people that do not live in the property. Think about that. A quarter, 1/4. So if I walk down my street, every fourth house is owned by somebody that doesn't live in it and they rent that out. That's crazy. I'm starting a family soon. You know, if I don't put myself in a position to succeed financially, then my children will not be in a position to own their own home. And even my generation, you know, people that were born in the late 80s, early 90s, if they're not crushing it in their career or they're not getting a ton of help from their family, they're not buying property. And that's a fact. Like, I got a lot of my very good friends that are never going to own their own home. And they know that because they're just not in a position financially that they can pull something like that off.
Hello, welcome to the Canadian Real Estate Channel. My name is Adriana Ostapenko. I own Ace Properties, an asset management company that now manages above 130 units, 30 plus which are in development. I'm also very, very passionate about giving people opportunities to grow wealth in real estate, just like it's changed my life, as well as inspiring and teaching others to do the same. I'm here with Zack. Welcome, Zack. He's a killer realtor from the Waterloo region, and he's here to update us on the market and tell us all about how to start investing in that market. Welcome.
Very cool. I appreciate it, Adriana. Awesome to have you on. And for those of you that have seen us before, thank you. We've had a lot of support and a lot of people reaching out kind of over that just after New Year's and first couple of weeks of January. So for those of you that reached out, really appreciate it. Today, we're going to go through a lot, but we're going to go quick. Okay? So today we're going to cover federal real estate changes really quickly. We're going to go how we're seeing our clients win in investing in Waterloo region. And then I want to talk about a few deals. There are a couple on the market that are worth a look as well. We're going to cover December stats and discuss kind of, you know, we made some predictions in the last video and not a lot has changed since, but there's going to be some changes coming up in the next few weeks that are going to have real implications on a real estate market. So I want to discuss a few scenarios that are likely to kind of pan out. So if you're watching this video towards the end of January, beginning of February, you should be coming into this spring knowing what strategies, what changes, and really what the landscape is going to be here in Waterloo region. You know, and that's why you guys and girls watching the video come to the channel. So we're going to get right into it, and we're going to start with a question. We have lots of comments. I had a great one. I wish I saved it. It's on one of the previous videos. Wow, this guy's really intense. Yeah, I got a lot of energy, but I would prefer more productive comments. You know, I do these videos and we do a lot of content based on what we know and what we think people want because we have a lot of experience working. But just like yourself, Adriana, you're just as much an educator as you are an action taker in your own business. And so for us to give the people what they want, I need to know what you want. So if there's specific topics that you guys and girls need to see, if you need more deal analysis, if you need help with specific parts that you're getting stuck on, either as a buyer, a seller, or as somebody that's looking to invest in real estate, or if you just need more market specific information, like I literally live and breathe Waterloo region. You know, I grew up here. I'm going to raise my family here. If we need to talk about more specifics about the area, you know, we're an open book. We just want to make sure we're delivering the goods that you guys want. So please, I just want to give the people what they want. Leave us a comment or email me directly if you don't want to drop a public comment. Really, we are an open book and I am the one that's answering these messages. You guys get direct access to me. So just wanted to start out the video by saying that. And then I wanted to offer a free offer. We've had a few people reach out for a free property report. This is for anybody that currently owns real estate and is curious as to what the value of it would be in today's market. I don't know about you, Adriana, but a lot of your job, especially as a real estate investor or somebody that is, you know, doing more moves financially than just owning a primary residence, understanding what your current position is now gives you so much power in understanding what moves you can and can't make and how possible those are. And a lot of that in real estate is very subjective until you actually go to sell or purchase property. So a big thing we do for all of our past clients, if they own property, we're giving them a property report at least once a year. So they have clarity on what's going on in their market, their specific area, and what specifically applies to their property. So they can say in 5 minutes, they can say, hey, yeah, okay, cool. I have an idea of what this would sell for, what my net would be. So if they're running scenarios in their head or with their financial planner or with us, they already have the information, because ultimately knowledge is power. So if you have a property in Waterloo region or the surrounding areas and you want to get a better understanding of what it's worth, no obligations, no strings attached, we will get in touch with you and we'll follow up with an idea and the research to back it behind it.
So much value there, Zach. I love that.
It's free, baby. First meeting, it's like most lawyers, first meeting's free. First meeting's free, right? So this part's going to be really quick. If you're not already following us on Instagram, a lot of people that are watching our YouTube videos are already connecting with us on our social media platforms. Instagram's our most active. We did 5 videos last week, just kind of outlining what these changes are and how they could impact, the people that it's directly related to. 5 initiatives and changes. Some of these are implemented already. Some of them are proposed and likely to be implemented. So we're just going to cover them real quick, because a lot of other people in the Canadian Real Estate channel have already discussed these as well. So first-time home buyer tax credit, you may get an extra $750. My opinion was like, my first-time home buyers will definitely take the $750, but most people are spending $300,000, $400,000, $500,000, $600,000 plus on their first home, because that's just how expensive real estate is now. And that is, a drop in the bucket when you're spending that kind of money. So we were just like, yeah, thanks, we'll take the money, but also that's really not going to move the needle. Next, 2-year ban on non-residents purchasing residential real estate. A lot of the big boys and girls in real estate investing, they're thinking, at least what they're saying is, if they want real estate exposure, they'll go to commercial, or they'll go find other vehicles to get real estate exposure. This is seems like much more of a political play than, actually implementing to make legitimate changes and improvements to our real estate markets in Canada, not just in Ontario. And I have to agree, it does seem like it's a little bit more of a political play as opposed to policy to improve the affordability and access to real estate in Canada. Too much to get into in that. We're not going to get into that here, but there's a lot of opinions flying around. So 3rd, multi-generational home renovation tax credit. This is great, actually. So if you are building or adding an additional unit on an existing property for a direct family relative, elderly, somebody with disabilities, they're going to give you a tax credit of up to $7,500. Again, it's going to cost you way more than $7,500 to do this, but very welcome. You're encouraging people to use space more efficiently and hopefully create more affordable units to give more supply to the market. It makes tons of sense. And I know in your experience, Adriana, you have a lot of experience in Hamilton, if I'm not mistaken, and Hamilton has gone through a significant intensification over the last 10 years. So a lot of these types of programs, you see directly relating to the market that you have experience in. Waterloo region is very much becoming the same, because Waterloo region was typically a city that grew out, and they've kind of reached that point where we'll continue to develop the suburbs out, but what about the rest of the land that's already developed? What can we utilize that for? Number 4, number 5, residential anti-flipping rule. They want their money. Simple as that. They want their money. And then finally, first home savings account. You can save a few $1,000s a year. That basically tax-free, and then you can use that to your first home purchase within 15 years, up to $40,000. I think this is good, but I also just think this doesn't help people. I think this will be better utilized by people who are already in a position to likely purchase real estate as an advantage, as opposed to helping people that could not afford property to eventually afford property. Because I'm going to tell you right now, if you're saving a few $1,000s a year for 10 years, and then you got 40 grand is not going to be a lot to purchase a property in pretty much anywhere in Southern Ontario in 10 years. So I think it's a good idea, but just as much a political, hey, we're trying, as opposed to policy to actually really help people that can't afford property right now.
So what would you suggest to be a good policy to help home buyers get in the market?
That's a really good question, and something that I asked myself when I first got into the business, because I noticed there was just really low inventory in my market. And the reality is we need more units quicker, and we need to incentivize builders to build more units that are affordable because it's a for-profit business. So why would they build, units that they can make $10,000 a piece on when they can go out and build units that they can make $50,000 or $100,000 units a piece on? So incentivize people to build more units quicker. They're already incentivizing intensification, which I think is a very positive step, but it's just not done it can't be done at a large enough volume. So people that actually have the capacity to do volume, or encourage people to grow into the ability to build a capacity of units that are suitable. We just can't build units fast enough, period. It's been a problem since the 60s or the 70s, if not longer in Canada. So reality, we just need more units quicker. Best case scenario, we get more affordable units. Worst case scenario, we just get more units, period. And that would hopefully alleviate the price appreciation, the value appreciation, because it's very quickly becoming out of reach for everyday Canadians to be able to afford even a normal home, let alone something that's nice.
So I feel like the MLI Select program came in good timing. It is quite helpful, and it gives us leeway in that direction of allowing developers to, access good financing for building. However, it doesn't fully fix the affordability issue, because back to your point, if I can choose between energy efficiency for my MLI Select points or affordability, I'm going to choose energy efficiency, because affordability is going to commit to lower profits for a long time as a developer. So ultimately, I think the government sometimes pushes it towards us developers to take the cuts, and they really should be coming in partnership with developers to provide the financial incentives to offer affordable units.
And furthermore, it's just, even if you had the capacity to build more, you have to pay more for all your trades. All of your inputs are more expensive. Yes. And even if you can find it. And so there's so many parts that go into properly developing real estate. I know properly. And the demand for everything that goes into that is sky high. And we have just as strong demand on the other side when the units are ready to go for an end unit consumer. So we need to figure out, how do we just bring more units to market quicker if there are more players, or if those players are given more resources. I mean, we got the space, we have the demand. Let's make it happen, right? Right. I'm not into politics. I'm not interested in much of that space. It really bothers me, because I find it's very difficult for people to just sit down and do the right thing. But I do understand problems are much more complicated than maybe we understand. So I just do think that if we can find a way to incentivize people to build more units quicker, like that would alleviate a lot of the end problems of actually having affordable real estate, which we just don't really have.
Sure.
Unfortunately. So on to what I think a lot of people will get a lot of value for this specific video, and why a lot of people watch these types of videos for some of the other markets, is really getting an insight on what types of investments and what types of investors can really, succeed and find, maybe additional or good value, as opposed to other markets or other types of real estate investments. So I really like to highlight every video or every couple of videos who is winning in terms of real estate investors in our market and how. So for our market, for newer investors, so maybe this is somebody who's doing their first, second, third, or fourth investment property, focusing on smaller value add and cash flow positive properties are still going to be your number one option, for a lot of reasons, primarily because it gives you a margin of safety. It's likely in your capacity for how much financing and cash and capital you have available. And it can also be scalable if you decide to continue to execute on those types of projects. Duplex conversions and tiny homes, those are going to be your bread and butter in Waterloo region for the next little bit. We have been doing a ton of work on tiny homes. We're going to be bringing some content for tiny homes in the future. Duplex conversions have been our bread and butter for the last 5 years. There are still fantastic options for newer investors, whether it's house hackers, families that are buying property around the universities or in our cities for their kids to go to school and get a little bit of real estate experience, or just a safe place to live. Because there is a high demand for them. They apply to a lot of buyers. They are typically affordable for investors who are newer, and they offer a ton of options. And as a newer investor, having multiple options with your property and still have it succeed is such a benefit that cannot be overlooked, because if you have to turn around and sell something like that in a pinch, there's a market for that. If you want to keep it for 20 years, you'll do great. If you want to keep it for 5 years and reassess, okay, you'll make some cash flow and build up lots of equity as your margin of safety in that 5 years. So we just see so many benefits to those types of properties. Furthermore, multi-unit properties that already have vacancies, or purchasing multi-unit properties as a family is a fantastic way to get into your first, maybe your second investment property. And I just want to focus on the bottom one down there, house hacking. Is house hacking just died? Like, where's my house hackers at? I just want to grab all these. If you are a first-time home buyer, I don't care if you're 20 or if you're 50, 60, 70, a house hacking is a great way to learn so many things about real estate investing, as well as just like adding a ton of value. And this involves buying a single family home. Maybe it has the potential to have a second unit in it. Maybe it doesn't. Maybe it's like a townhouse, a freehold townhouse, or even a semi-detached that you can rent out some of the rooms or rent out the basement to. Even my mom, she has a single family home, a side split in a nice neighborhood in Kitchener. And, she rented out the lower level unit to a PhD student for a couple of years. And it's just, it's space you never use. And it's a fantastic way to earn extra income and also get lots of experience in every aspect of being a real estate investor with relatively low risk, because you still get to live in the property. Sweet. All right. And then our intermediate and experienced investors. And this is something that Adriana can speak a lot to, as she's really gone through kind of that level up process beyond just, duplex conversions, single family flips, single family buy and holds. For us in our market, the people that are winning is they're just focusing on the premium locations and the cost per door. Prices have depressed more so in single family homes and primary residences as opposed to our multi-units, but they have depressed with the multi-units. And if you can focus on finding the motivated or finding the premium locations, the prices for those types of properties don't necessarily get knocked down as much, just because they are premium locations, and which means they'll likely appreciate better and cash flow better long term. So a little bit of a trade-off, but like if you can get downtown locations, uptown locations, or midtown locations at a discount, I like that a lot, because the longer this goes on with the lack of affordability in our market, the more people are going to be pushed into permanently renting properties, and your rentals will earn more on a cash flow basis as opposed to just a straight up appreciation like single family homes may. And so we're really encouraging people to figure out ways to lock in today's prices and go for larger multi-units that you can hold for 10 to 20 years and go through the natural turnover and improvement of the units process. Slower game, but more sustainable and much more profitable. So, and then bonus, if you can focus on multi-units with land or multi-units that have extra space, multi-units that are in premium locations that may be depressed but have the zoning for larger developments in the future. Those are the things that you can really look for, that you should be leaning on your realtor for. So if you're working with somebody with real estate investing experience, these are things that we're considering for all of our people. So if you're intermediate or experienced, focus on the premium locations, try and get the lowest cost per door in the best area you can. Bonus if you can find additional features like extra land, storage space, zoning to promote future development in your area and on your lot. Can't lose for that. So these are the things that we're focusing on. Adriana, I want to just turn it over to you real quick, because when we were chatting before we get on here, you have some experience doing, some of the either the redevelopment or the development process. If you're looking at multi-units in Southern Ontario now, what is kind of the one or two things that you're focusing on before you're thinking about numbers, before you're thinking about specific markets? We're just kind of curious to pick your brain. I think everybody else watching the video would be interested as well.
Yeah, so first thing is unit size. I find that anything above 16 units just brings you to a different kind of average than you do with anything under that. Cost per unit, maintenance costs, operations, experience, property management, it just brings the value that anything lower than that. And we have a variety. We have anywhere from 7 units to 50 units in our portfolio. So yeah, we've experienced the mid-range, the lower side, and the higher side, and we do appreciate that. Anything above 16 units is something that I'd be looking at. Ontario is very specific. As I mentioned to you earlier, I'm out in New Brunswick. There's a few reasons why. Ontario, very specific, and it's particularly the landlord side of things when you're trying to do value add, and the timeline that goes in. So first thing that I'm doing is I'm making sure that I have enough contingency plan in place that we can repurpose the portfolio, bring the value up that where it needs to be, and be able to do it all as smoothly as we can with the existing tenants.
Yeah. And that's much more important when you're dealing with as an investor, if you're dealing with only one of your properties and that's your one property, the contingency plan and funds are very important. Do not stretch yourself too thin. And obviously somebody as experienced as you and that has a team and knows the questions to ask, that's really important. But as an investor, if you guys are watching this video, yes, I encourage people, go take action. Go do the things you need to do to invest properly, but don't overlook having your backup plan, having your options set aside so that if things do change, you know what the heck you're doing and you're not going to be caught with your pants down. So, and I think a lot of investors have learned that over the last 12 months, especially.
100%. Multifamily is a long-term strategy. I'm in the buy and hold world. I don't do short-term quick flips myself. We do a lot of reposition and value add, as you said, because that's where you increase such value to the portfolio. But ultimately, it is a longer-term strategy. We have always 5-year terms minimum on our investments, and then we have a couple of extra backup plans in case of market fluctuations.
Yeah, I mean, we're not reinventing the wheel, Adriana. We're just executing on the strategy.
That's right.
There's no get rich quick in real estate. That's a fable, especially when we have more stabilizing markets, we'll call them for now. So I appreciate kind of your input. And I think if people have comments or questions specifically for Adriana, she's got a ton of experience, below, please. But now we get to the fun stuff. We get to the deals. We're going to go through 3 deals that are available right now. I think we got 3 here. We're going to go slide over to the presentation. We're going to go through just the basics of these. This is off-market vacant fourplex. We've shared this before. We've had this on our investor hot list that we emailed out to you guys. This is a vacant fourplex, and it is 3-bedroom units, 2 3-bedroom units, and then 2 bachelors with 3-car parking and a shed, or 3-car garage plus parking plus storage shed in the backyard. Purpose built, great size lot for redevelopment. Lots of redevelopment, as you can kind of see in the photo. The building right beside it's actually now finished, and the area is getting completely redeveloped. Right by Fairview Park Mall, right by the highway, close to the 401. 5 minutes, 10 minutes by bus to downtown Kitchener. We own property in this neighborhood as well for long-term holds. So $900,000 or best offer. This is a BRRRR. If you're looking for a BRRRR, you get all these units vacant. You can get more predictable refinancing on something like this because your turnaround time is much more predictable because you can get to work right away. So contact us directly if you have questions on this one. Next, we're looking at a vacant duplex. Again, I highlighted earlier, vacant units are key because rents have gone up so quickly. If you are purchasing property that have tenants that have been there for 3 years plus, you're leaving minimum a few $100s on the table per month. And since interest rates have kind of eaten into our profits the last little bit, if you're on variable or if you're acquiring new financing right now, it's really important to make sure that you're getting at least market rents or close to, or else your properties just aren't going to be cash flowing that well. So this one here, $499, it's right behind the hospital. So I'm thinking young family in 1 unit, maybe a nurse, somebody who is practicing at that hospital, orderly, paramedic, no shortage. And there's 3 schools right here. So no shortage of qualified renters. And I mean, this would be a location that you could probably turn this around in 5 years if you want to upgrade into something bigger, or this location, we hold property here as well. Be happy to hold this for an extended period of time. Next, and also just $499. It's going to sell for more than that, I assume, but anywhere in the 5s would just be a steal for a vacant legal duplex, no matter the condition. Anything in the 5s is a steal in our market right now. Fiveplex. Now, Adriana, I've shared this one before. We've had a little bit of interest, but the reason why I keep sharing this one is it's a purpose-built Fiveplex right downtown Kitchener. The cash flow is not great. The rents are not good, but it's a purpose-built Fiveplex downtown Kitchener. The reason why I highlight that it's a Fiveplex again is you may be able to get residential financing for this type of property, which is much more favorable than commercial financing for this size and this many units of a property. So I also want to highlight that it's been on the market. If they're keeping it on the market for 3, 4, 5, 6 months, they are motivated to sell. It's just a matter of time until somebody can come to the right terms, price, and agreement. So not too many purpose-built, Fiveplexes or purpose-built anything that hit the market, period. So we're interested in anything. It's just a matter of negotiating the right price and terms. So for this Last one, semi-detached house hack. Guys, first-time home buyers, house hackers, people that want to acquire another property and still want to live on the cheap. $399. This is a freehold semi-detached with a nice sized yard, parking for $3, side door to the basement so you can rent it out to a buddy or a colleague and live in the upstairs, no problem. It's going to need some work, but that just means you get it at a cheaper price. So even if you don't have the budget to buy and renovate, no problem. Lock in the cheaper purchase price now if you can afford the financing. And then as you save more money or as your financial position improves and you have more equity in the property, you can access that equity to fix up the things that you need to inside. I think house hackers and people that are able to burr smaller stuff are really going to win in the next couple of years. There's just a lot of hesitation and a lot of financial handcuffs with how expensive financing is going to get. So I still think like primary, you want to buy a primary residence or you want to house hack a property, semis in Kitchener are a fantastic option, especially because a lot of those are in premium locations where you can rent to pretty much anybody and make sure you get good tenants. And how do you find these, Adriana? You go to the hot list. Please give us more inventory. I left myself a little note there. I got some awesome messages from you viewers that signed up for the investor hot list over the last 30 or 60 days here. That sweet, sweet investor hot list, that juicy resi financing. I've had some awesome messages and I appreciate all of them. I just typed that in because I want a little bit more inventory because I haven't been able to share that many deals because there just hasn't been a ton on our market. So for any of you that are watching that aren't already on the investor hot list, we send out an email every week with the best deals that we can find on market, any off market stuff we have, and specific comments and strategies that we are finding work and find success. So it's a great way for you to get an initial look at our market. And Adrian, I know when you were probably starting to invest in real estate, you invest in the markets that you know, but eventually you have the opportunity or you have the capacity to execute on deals in areas that you maybe not know as well. And so a lot of people watching our videos aren't necessarily familiar with the Waterloo region and what types of properties and prices they are and what they rent out for. So the investor hot list is a really good preliminary way to understand what types of deals and price points are in our market. So if you are, hey, I want to learn a little bit about Waterloo region, but I'm not ready to really pull the trigger and commit. Okay, get on the investor hot list. Myself, Matt, and Derek do this personally. This isn't like a auto-generated, like we go out and we view these properties or we fact check and number check them before we send them out to you guys. It's a free resource. Go to phippsbrittainrealestate.com/contact, select the investor tab. There's going to be a link in the description for you guys if you're interested. Free resources. Okay.
Value there.
Last before we go on to some of the market updates, I'm not going to say Matt and I are the last of the residential real estate investors that are also agents in town, but I can say with a fair amount of confidence that a lot of people that have been doing residential real estate investing in terms of working with clients to help them purchase and sell as real estate agents weren't as active as they have been in the past. Last year was a different year for a lot of people, but over 50% of our business was helping investors last year. And I put up The Last of Us here. I like to put in some pop culture, some media references. I'm a big fan of the games. I'm a big video game guy, and I'm a big fan of I watched the first episode of the show. So I had to throw it up like right after I watched the show. I was doing my kind of figuring out what I wanted to finish up my presentation with. So if anybody's watched the show, it's wild, super intense. I'm pumped for episode number 2. But if you are offering or viewing on properties and you don't have a Joel, the main character here, he's Joel, and he is supposed to protect Ellie, the second main character, basically from dying, right? I'm not protecting any of my clients from dying, but I want to protect you guys from, getting screwed on a deal, which is ultimately what buyers and sellers don't want. They just don't want to get screwed over. So I just want to make sure that everybody that's watching this video knows, if you are coming to our market and you want to invest in real estate, you want to view and offer and purchase property, make sure you hire an experienced real estate agent that does the deals that you want to do. And I know, Adrian, when you are going to look for a team in a different market, or if you're looking for people that you need to add to your team for specific things, you're looking for people that have the experience to execute on those exact types of deals, because they're going to be able to take all the information and experience that you need, and they're going to be able to do it like this. So we analyze all the deals that come on the market probably before you do. We're always available between myself and my partner, Matt Phipps, to show units and write offers. We have the trust and experience of not only the people that have come to us from the Canadian Real Estate Channel, but everybody else that we've been doing business with for the last 6 or 7 years. And this is my personal number. So this is my business cell phone, 509-591-8419. I've had it for 15 years. It's not changing. You can call me if you're going to go view properties or you want to set up showings. Just make sure you are working with somebody else other than the listing agent to purchase properties, especially if they're investment properties, because the majority of people that sell investment properties probably sell one, maybe two a year, and they have no idea what they're doing or even how to help keep you protected when you're purchasing the property. So please hire a professional, please, right? Just PSA, work with a professional.
Very important to have the right team members.
Have to. And we're going to fly through this. So if you're watching this video, pause this slide. And then the next one I'm going to cover as well, we'll go over some rental rates. This is just kind of where our market stands right now. Condos are the only market segment that have appreciated in the last little bit. I've talked about this before in previous videos. This is primarily because in Waterloo region, a lot of the condos that are selling are brand spanking new and in premium locations. Waterloo region was not a condo market, Adriana. It was not. It was, you're buying the 100-year-old red brick house with a picket fence, right? Or the side split and the bungalows in the midtown locations on the outskirts, right? This is very quickly becoming a condo market with the downtown redevelopment in Kitchener and the uptown redevelopment in Waterloo. So all the condos that are selling are nicer, newer, and appeal to modern buyers, and they're willing to pay for it. So those prices are coming up a little bit. Townhouse, semi-detached, and detached prices, they're coming down a little bit in December compared to November, and they're down significantly from December of last year because that's when we saw prices just get skyrocketed. So these are the prices now. If you guys want monthly data, we share all that on our Instagram page. Go send us a follow there, and you can always email us direct if you have specific questions about pockets, styles of properties, or market segments, because this purpose is just to give people a broad idea of where our market's at now and where it is compared to the previous months. Helps give you context on understanding is now the right time for you. Next slide. Again, you guys can pause this real quick. These are rental rates. So if you're looking at my deals that I'm sending out on the investor hot list, or you're looking at them on your own and you're like, well, I have no idea what that's going to rent for. Save this slide. Take a screenshot of it or something. Single family homes, legal duplexes, 1-bed, 2-bed, and 3-bed units. Here's the typical rental ranges. If you have no idea and you're running your own numbers, use the lower end of these ranges. Be safe, right? If you're analyzing specific deals, shoot us a quick email. We probably already have an Excel done for it, and we probably already have the metrics done for it as well. Because like I said, we're looking at all these multi-unit deals specifically as soon as they come to market. And if they don't have the financial information ready, we call the listing agent or email them direct to get the information accurately right from the source on the expenses, what the property taxes are, what their actual rental rates are, not their projected rental rates. So these are just good baseline information, but again, take it with a grain of salt if you're analyzing your own deals. And then, okay, we're gonna do a little prediction.
Your face right now.
Gonna do a little prediction. Okay. And I want it, like, I don't want heat in the comments, but I am curious to hear people's rationale, because I think a lot of people that are watching these videos have a lot of legitimate points when they're arguing for or against which way the market's going to go. And I just want to highlight, expectations are that interest rates are going to rise, right, Adriana? I think that's, we're recording this on January 19th. Video is going to come out, probably a week or maybe a little bit before that. So I expect interest rate announcement next week is already going to happen. So roast me if I'm way off, please. But I expect interest rates to rise. They'll rise in January. They may rise again before the spring. And until they say, hey, this is our goal and we're not going to stop until we get there, the expectations that interest rates are going to rise until inflation gets under control. So if interest rates continue to rise, I expect prices to decline slightly, but I don't expect prices to decline enough that real estate gets more affordable. And what I mean by that is I did a slide on our last video. And if you haven't watched it, that was my annual review of 2020 and then my predictions for 2023. I also threw you guys some strategies for buyers, sellers, and investors that you should execute on in 2023. But the last part of that slide, affordability and long-term trends. Long-term trend that has been happening and will continue to happen until something changes dramatically is that we cannot build enough units fast enough for our demand. So if we continually cannot build up enough units to have even balanced levels of inventory in big to medium-sized markets across Canada, prices will continue to rise and affordability will go like this. Affordability is already like this, guys. It's so hard you could be making $100,000 a year, have no debt, and you can't even afford to get a mortgage for, an $800,000 property in my market. So I don't see affordability improving unless dramatic changes happen. Even if prices come down, the affordability on the month to month is coming up. So prices will have to come down so dramatically that that expensive mortgage is on a much lower purchase price. So that expensive mortgage is cheaper. Your monthly expenses are going to go up to carry the debt, even though the debt will be at a lower price. So I just think that unless long-term trends, really change and inventory is able to be, brought to market and built up, regardless of if prices come down 5%, 10%, 20%, interest rates will have come up enough that it's going to offset how low of a price point you can purchase a property at. So that's why we make suggestions like focus on premium locations, focus on properties that you can add value to, because that can give you a margin of safety, and focus on properties that offer healthy cash flow, because that will offset any short-term fluctuations in the condition, in the financing market, or in the rental rates. Like Adriana said, she has executed on these strategies as well. We're not reinventing the wheel, but I really want people to understand that affordability is only going to get worse in Ontario long-term. So if you think that you're going to get better value or a better deal in 5 years or 10 years from now, I might bet my bank account that you're not, because regardless of what happens for the next 1 or 2 years, we just don't have enough properties coming to market quick enough. We just don't have enough for the demand, and people are going to start gobbling them up. Prices will go up.
I keep hearing people say lately that we're becoming a renter's nation, or this is where we're trending long term. What's your thoughts about that?
It is 100%. 25% of my market is owned by people that do not live in the property. Think about that. A quarter. 1/4. So if I walk down my street, every 4th house is owned by somebody that doesn't live in it, and they rent that out. That's crazy. By the time, I would probably say, that's only going to grow. And how quickly that's going to grow is going to be quite exponential, because what's happening is real estate is, I hate calling this a game, but real estate is very much a game that once you're in it, it's easier. And what I mean by that is you can leverage the asset and the equity and the cash flow that you can gain from the asset in order to grow or expand, whether it's in that property, in new properties. It's kind of like an old boys club. Once you're in, you got it good, right? Which is a terrible analogy, but it's also so true. We will be we'll be a renter's economy. Like I'm starting a family soon. If I don't put myself in a position to succeed financially, then my children will not be in a position to own their own home. And even my generation, people that were born in the late 80s, early 90s, if they're not crushing it in their career, or they're not getting a ton of help from their family, they're not buying property. And that's a fact. Like I got a lot of my very good friends that are never going to own their own home, and they know that because they're just not in a position financially that they can pull something like that off. So very much so, most large markets are already there. Most medium sized markets are getting there very quickly. But fantastic question. And that just motivates me more to focus on the people in our network that want to, put themselves in a position to succeed, because they see the writing on the wall. If you're going to live in Canada for the next 30 years, rents are going to get very expensive. Property is going to get more expensive. So get ready.
Yeah. Also highlights the importance of house hacking. As you said earlier, I house hacked for 6.5 years myself while we were growing our portfolio. So it's a really awesome strategy to get in.
We just moved out of our first duplex, and we bought that property like 3-4 years ago, me and my wife. Bought a crappy bungalow, converted into a legal duplex, lived in the upstairs, rented it out in the basement. We lived for a few $100 more and owned a property. A few $100 more a month, and I owned a property. And now that property has made me hundreds of thousands of dollars and opened up so many doors and the ability to reinvest those funds into other projects and properties. It's not rocket science. It's simple, but it's not easy. And I think we should sign off on that. It is simple, but it's not easy, ladies and gentlemen. So if you want to make it easy, give Adriana a call, shoot me an email, leave me a comment. We're here to help, and we're happy to do so.
100%. Thank you so much, Zack. So appreciate it. It was such fun time talking to you as always. You've shared your information with everybody. Can you reshare your socials and your YouTube?
Yes. At Phipps Brittain Real Estate on Instagram. I'm active on there. Our YouTube channel, there's a link in the description. We do post a lot more educational content as opposed to market updates there. So if you guys are looking on specifically duplex conversions, multi-unit BRRRRs, we got lots of stuff on that, as well as how to purchase your first investment property. Our website has a free buyer guide download. Our website has a free investor hot list link where we share an infinite amount of investor resources and deals. But more importantly, if you want to just stay connected and get to know us and what we're about and what we're doing, our Instagram page is a fantastic way to do that. We're very transparent. I think we've had a lot of great comments from people here saying, hey, you know, we wanted to reach out because you just seem like a normal person. And I just want to say, yeah, I'm a super normal person. You know, I go to lunch with my friends downtown Kitchener. I know the coffee shops, the trails. I walk them, I run them, I hang out here. You know, I'm a normal person that's just executing on their real estate dreams. So if you guys want a part of it, get in touch and let's make it happen.
I love it. On my end, feel free to follow me on Instagram or Facebook, Adriana Ostapenko, and the YouTube channel, same thing at Ace Properties. It was such a pleasure. I'm looking forward to seeing you next time on the Canadian Real Estate Channel.
See you guys soon. Thank you for watching.